Hello everyone. Welcome to Finance Focus. Most people are taught one big idea about money. They are taught that all debt is bad. Your parents probably told you this. Your teachers probably told you this. They said to avoid debt at all costs. They said to cut up your credit cards and live within your means. This is the advice of the poor and the middle class. They see debt as a dangerous enemy that will ruin your life, a chain that holds you down. Being debt-free is their ultimate financial goal. To understand how the rich use debt, know that not all debt is created equal. There are two kinds of debt: good debt and bad debt. The difference is simple: the direction of cash flow. Does the debt put money into your pocket or take money out? Your answer decides if you're building wealth or digging a hole. Bad debt buys liabilities, things that drain you: a fancy car on a loan, a TV on a credit card, designer clothes, even vacations on credit. You earn and then ship money to the bank for things that lose value. You end up working for your debt. Good debt buys assets: a rental property with a mortgage where rent covers expenses and leaves profit. The asset pays you and the loan. Or a business bought with a loan. Revenues retire the debt and put cash in your pocket. Good debt lets you use other people's money to build your fortune. Which worker do you want? The rich hire workers, assets that pay them 24/7. That is the core mindset shift. Now the fun part, the math the rich use. It's called leverage. Leverage is using borrowed money to increase the return on your money. Simple and powerful. Once you see it, you'll know why savings alone won't make you rich. Imagine you have $100,000 in cash. You buy a $100,000 rental property for cash. It nets $10,000 per year after expenses. That's a 10% return, far better than a 1% savings account. Or use your $100,000 as 5 $20,000 down payments. For each property, you borrow $80,000. Now you control $500,000 in real estate with $100,000 cash. Each property still generates income. Say each nets $2,000 after mortgage and expenses. Total profit, $10,000. Same $10,000 profit on $100,000 invested equals 10% return. Let's adjust. What if each nets $4,000? Now total profit is $20,000 on $100,000. Your return doubles to 20%. That's leverage. You're using other people's money to magnify results. You keep all the profit on a larger asset while only putting up a fraction of the cost. Leverage is powerful. It can make you very rich, very fast. But it cuts both ways. It magnifies losses too. The wealthy are calculated risk takers, not gamblers. What happens if the market turns? Vacancies rise, yet mortgages, taxes, and insurance remain. Without reserves, you pay from your pocket. Negative cash flow drains savings. If values fall below your loan, you're underwater. If forced to sell, you might bring cash to close. With 5 leveraged properties, a downturn can wipe out your stake and more. Interest rate risk. A rate increase can turn profit into loss overnight, multiplied across your portfolio. Survival requires reading and mastering loan terms. If you can hold through storms with solid cash flow and reserves, time can be your ally. Know the downside as well as the upside. The rich analyze more than price and income. They see the entire picture. 2 key levers: interest rates and taxes. The tax code incentivizes housing, jobs, and investment. Understand the rules to legally pay less tax and boost returns. Interest on loans for assets is often deductible against that asset's income, lowering taxable income. The government effectively subsidizes your loan. The spread is where leveraged profit lives. Depreciation is a phantom expense that can reduce taxes even if values rise. Sometimes you show a paper loss while pocketing cash each month. This is legal tax avoidance, using incentives as written. That's why the rich focus on assets, not wages. The rich study the incentives. Many don't even know the game is being played. The wealthy use a full toolbox of debt instruments, each for a purpose. Use the right tool for the right job. Mortgages, the #1 wealth builder in real estate, massive leverage. Lines of credit, only pay interest on what you use. Act fast when opportunity appears. Then refinance long term. Business loans. Scale operations with the business's profits, paying back the debt. Use entities to separate business debt from personal assets. Margin can boost gains, but it's extremely risky. Downturns trigger margin calls and forced sales. Only sophisticated investors who fully grasp the risks should touch margin. For most, mortgages, lines of credit, and business loans are the core tools. The rich aren't reckless. They master risk. They build systems and rules, safety nets for bad scenarios. Preparation lets them sleep, even with millions in debt. Rule 1. Cash reserves. Cover 6 to 12 months of all expenses with zero income. Rule 2. Do your homework. Don't fall in love with deals. Fall in love with numbers. Stress test vacancies, rents, and costs. Rule 3. Diversify. Don't load all borrowed money into one asset. Finally, build a team. Paying experts isn't an expense. It's an investment in security and success. Your team becomes your most valuable asset. Let's bust a few myths. The rich don't always pay cash, especially not for assets. Cash is too valuable to trap in one asset. Use it to control more, not own one thing outright. $1 building in cash, or 5 with $1 as 20% down? Which builds wealth faster? Tenants help retire the debt while you keep the upside. Gambling is luck and no control. Investing with debt is research, analysis, clear plans, and contingencies. Comparing leveraged investing to gambling is like a surgeon to a lottery ticket. The rich aren't gamblers. They are the house. Start small. Keep learning. Move deliberately. This is a journey, not a race. Shift your mindset. Good debt buys assets. Bad debt buys liabilities. Educate yourself and get your financial house in order. Build a 3 to 6 month emergency fund. Eliminate bad debt. Don't pour water into a leaky bucket. Your first deal is for learning, not for getting rich. Always do the math and stress test it. Debt is a powerful tool. In educated hands, it builds immense wealth. Choose to be educated. Thanks for watching, and make sure to subscribe for more amazing videos.